AIM and Aquis-listed Cadence Minerals is a mining and commodity investment company with assets in Europe, Australia, and South America. I'm joined today by Chief Executive Kiran Morzaria. Hello, Kiran. How are you doing?
Hello, Alan. How are you doing?
I'm very good, thanks. Very good indeed. Now, I know you're in Portugal. You're en route to Brazil to visit the company's flagship Amapa project. Before we get to that, you said in the recent interim results that your equity investments have performed very well, delivering an interim pre-tax profit of 2.84 million. Can you tell us what this relates to?
Yeah, absolutely. So those are, what Cadence is basically an investment company, and it has several sides to it. So the first one part of it is its equity investments, both passive, which we just invest and trade, and active, in which we are a board member or representative. So that is in relation to the performance of that portfolio, predominantly European metals holdings, which delivered, I think, off the top delivered the largest gain. And overall in our portfolio is up something like 500%. And so of that profit before tax, the gross profit was around 3.1 million was in relation to what we call unrealized gains, so the movement of price of our equity investments. And the rest was in relation to realized gains. So we sold some of our equity investments and made around £400,000 in realized cash from that realized profit from that sale. So it's basically the performance of our public listed investments that we have, which we have, as I said, EMH, which sits on this active side where I'm a director of, a non-executive, and passive, which is a multiple of assets such as Charger Minerals, Celsius, MacArthur, and et cetera, focused on the iron ore and lithium sector.
Okay. You also mentioned the review of the North Australia joint venture hard rock lithium assets at Litchfield, Picasso, and Alcuta, and the connection to ASX listed Core Lithium. This had lain dormant in the portfolio for some time. Why the change in approach now?
Well, as you rightly pointed, lay dormant from around 2019. We had some investments decisions. This actually came from a strategy where we want to be a bit more masters of our own destiny. So we looked at Amapa and Litchfield and sort of these hard rock lithium assets. At that time, we thought applying capital and time and effort to Amapa was a better use. And we've seen, the transformation in terms of growth of the company, in terms of share price and where we are now as a result of that investment. But Litchfield has laid dormant, and that's partly because although we're firm believers in electrification of vehicles and lithium assets becoming really formative, that's why we still hold these. We start seeing as a result of the pandemic, lockdown, acceleration of new technologies, commitment from governments in terms of electrification of vehicles, and an interest in lithium again, generally in the market. And one of those assets, and when we actually got invested in this Australian asset, it was already next to Core Lithium, but then Core Lithium hadn't had a DFS. It was much earlier in its process. It's now got a DFS of somewhere in the region of $384 million. And if we look at where our assets are, or the Litchfield particularly asset, it's basically adjacent to the eastern end of the Core Lithium areas, which is where the majority of their resource and basically where they've got DFS over the Finniss project. So ours is very early stage. Let's be clear. We did some reconnaissance geology, some field work associated with that. We're going to review some of the sampling and see where it goes from there. We're nowhere near the DFS and NPV and a Ganfeng offtake, but we're in the right locality. It looks like the right geology. And what we're going to do is see how we can create value here, and whether we create value, whether developing ourselves, look at a joint venture partner, or something like a VEN, so that we can diversify some of our risks in relation to the capital expenditure required as what we will be, a 32% shareholder of that, to develop this asset. We've gone through it because we've seen where Core is, we're in the right, and we've seen how the market appreciates what Core has done. And Charger Metals, who are also in that area, which we've got an equity investment in as well.
Super. That sounds really exciting, actually. I mean, $384 million PFS is not to be sniffed at. But sticking with Australia, with Australia, you've also got a joint venture over some of the mineral concessions associated with the Yangibana rare earth deposit, and also, of course, going to Mexico, the Sonora lithium project. And shareholders, I think, are asking questions, rightly so, as to how you're going to unlock the value here. Can you elaborate?
Yeah. So I think this is what we'll call into our private passive investments. You know, we have 30% stake in each of these in a concession where we're a minority shareholder. And so if we look at Hastings Technology Metals, there we are we own several concessions that are within the Yangamana deposit. And if we look at their mine plan and their PF bankable feasibility study, that asset is currently not in the bankable feasibility, and it's therefore not in the mine plan per se. So ascribing the value, in which such shareholders have asked us to do, is very hard, and holds a sort of Damocles if it doesn't get developed or gets developed in 20 years' time. So what we have to look to do is liaise with Hastings and see how we can deliver value to our shareholders through various agreements and such. So, that's an ongoing discussion with Hastings. I mean, their priorities are clearly developing that asset, the one where they're going to deliver the higher NPV. And we will continue to liaise, but ultimately we've still got an asset that is in a very good area, which is technically viable. And the same goes for Sonora. We again have an area with 30% JV on the Fleur and other concessions, which are adjacent to Ventana, which is going to be mined first and being mined for the first 7 years. And now we have a transition, one would hope a transition subject to shareholder approval, of Ganfeng taking over that asset. So both these assets have great technical value. They've done really well. Certainly we believe they're economic. And what we need to look is how we extract value. And that is ultimately going to be with the current operators, Hastings Technologies on one hand, and assuming that the shareholder approval goes ahead with Ganfeng on the other side. So once Ganfeng gets their feet under the table, we'll begin talking to them and continuing all our discussions that we've been having with BCN in that regard.
Okay. So onto the flagship project. That's, of course, the Amapa iron ore project in northeastern Brazil. This is, of course, the former Anglo-American mine, all the infrastructure, the private railway and the port. Cadence is about to complete on the first phase of its investment to own 20% of this huge asset, having already overseen the shipping of 3 cargoes of iron ore tailings to international buyers. So, Kiran, can you tell us what will a fully recommissioned Amapa mine mean to Cadence, its shareholders, and perhaps most of all, the region of Amapa in northeastern Brazil?
Well, a fully commissioned mine will, for Cadence, we would have taken an investment of 6 million if we stay at 27%, 6 million. Anglo-American put a value on a balance sheet of about $600 million. So that is an incredible uplift if we talk about shareholder value. And we would hope that that value from seeing that coming into production will then reflect to us. Theoretically, that's dividend flow, et cetera, going to us as a 27% shareholder through a joint venture. So that's the shareholder value that we will see. And for the mine from the Amapa state, well, we're looking at a big influencer there. So we're talking about 1 to 3% GDP, in terms of profitability into the Amapa state. On a purposes of turnover, it's something like 20% of GDP. But let's look at profitability. We also have the net effects at statewide and locally and the whole of Brazil. We're talking about an impact of around 600 to 800 workers, but indirectly going out to 4,000 workers. That is a big impact statewide and Brazil generally. So these are big impacts. I'm already seeing it. We started with around 3 workers, 3 staff directly and indirectly. We're now up to 300. We have various studies ongoing. And along those studies, we've sort of got bits of recommissioning ongoing, whether it be, getting the ambulance for the railway, which used to run on the railway, up and running, which has just started. And, I'm really looking forward to spending real time out there to see the PFS is coming out. Parts of the PFS is being reported, reviewing those, interacting, seeing the optionality, how we can improve economics. That's one of my primary visits, is to look at the systems and processes that are having to be established, all the way from auditing, the licenses, going through that process, the financial controls, all of that's ongoing. And my time being out there is going to be very much focused on that. And of course, liaising with federal, state authorities and the governor of Amapa, to show that we are making progress. So I think it's already important. And of course, it's hugely significant to the state, as many reasons I've just mentioned beforehand.
I'm just going to bring up a slide now which shows some of the people in the region working for you. Perhaps you can just talk us through these, Kiran?
Oh, yeah, absolutely. So top left is actually the jack-up rig. So the jack-up rig is where there was a plan to, effectively was meant to, where you'd load Panamax, and that's attempting to be righted. So they're righting the jack-up rig there. On the right, it's basically some workers clearing out the rail areas, because we had to do the survey for the rail areas, which is sort of over 100 kilometers of walking the line, as it were, and surveying the rail as part of the PFS study. Bottom left is the loading of Panamax from the public port, not our port, because as you can see from the top, it needs the righting of the jack-up rig, and the bottom right is effectively loading of the stockpiles at the port, which is at the port is ongoing, but it's now ongoing for a third party. So it's still, but we're still generating revenue. We're not shipping our own material at this point because of the change in iron ore price, especially for the 58% material. But the third party material, Dev is being paid to do that work at a commercial rate. So it is also still generating revenue, although not to the level of shipping of the material of our stockpile.
Okay, so Kiran, we're still waiting for the secure bank creditors to sign off on the final settlement agreement, so Cadence can complete the first phase of this investment. Why has this taken so long?
Yeah, and I really understand the frustrations, and I banged my head against the wall several times, not understanding why the banks are taking so long. It's not for lack of us pushing them, but let's be clear here. We reached a final settlement. We reached a settlement agreement in principle in September last year, and since then, the value hasn't changed. How it's going to be paid hasn't changed, and the timing of how it's going to be paid hasn't changed in terms of once we sign the settlement agreement. So it's not been a commercial negotiation, it's been a procedural and an administrative process that the banks have to go through. The Italian bank that's involved got their credit committee approval done very quickly, in fact, much earlier than the rest. It's just the Indian banks have just taken time. They provided us with that it was a COVID issue beforehand, but ultimately it's a process of where they have to go through several credit committee approvals before they get that approval to sign it. So even the documentation of the settlement agreement is almost in its final form. We're talking about legalese here that's having to be bantered around, and that's near enough there. So it's just the credit committees that are really the critical path. And we can't understand why, but we then have to look from the other side where they have, India has, a lot of the banks had lots of non-performing loans, corruption involved in it. So their audit process is much more stringent. But I certainly believe it should have been done well before a year, and certainly that was never my expectation. And it's just pushing them, telling them to get on with it, because ultimately their options are very poor if they don't. If they don't do this deal, which has a settlement, maybe not the amount that they want, but it's a settlement. The other side is that it goes into bankruptcy. Cadence takes its money back. Thank you. It's not a great outcome for Cadence, but ultimately it's a worse outcome for them, because yes, they might be secured over the asset, but ultimately this asset's only worth it because it's joined together as an integrated project through its licenses. As soon as it goes to bankruptcy, all its licenses go, and therefore we've basically got some stockpile which no one's going to let you move, and scrap metal. So their outcome is bad if they don't do it. So that's why I've always had I've said fait accompli, because the deal was done in principle beforehand. It's just process, and the outcomes are, in my opinion, for them are just they will sign this, and let's get the settlement agreement. Once we get the settlement agreement, once we get the credit committees announced, then we move on to settlement agreement, then our vesting. So we can only push, and that's what we continue to do.
Okay, so on that note, how do you respond to shareholders pointing to the fall in the Cadence share price over the past few months?
Well, I think we have to look at who we are. We are an investment company in mineral resources and associated commodities. If you look at where we were, we were near 30p, below 20 now. That time was at the point where we had some of the highest prices in iron ore. We were above $200 a a ton, a dry ton. We're now at the 62%, circa 100. So that's a halving in that value that's occurred. That doesn't make a difference to our economics, because when we assessed it, it was at 80. Our assessment's at 85. So that doesn't make that much difference to where we looked at it. And so that is the major. If you look at the correlation, for example, I'm not going to compare ourselves to Champion Iron. They're a multi-billion-dollar company producing iron assets, but there's a very strong, movement in the iron ore, and companies that are associated and invested in iron ore has been similar, and that is ultimately the driver behind it. And we've just got to look at where our value is. Cadence is driven by two things. It's public investments like EMH, and I know shareholders have said, well, lithium's gone up, why haven't you? Well, because we've got a direct impact on something like EMH, because EMH, if it's EMH goes up and down, whether lithium goes up or down, affects our price. While because this is a active private investment, people will look to the commodity to price us. And as the iron ore price has gone down, probably reaching more sensible long-term levels, our prices come down as a result of that. So it's to do with pricing of iron ore. And if EMH does really well, whether or not lithium prices go up or down, but that will lift or drop our price depending on their performance.
Okay. Well, nonetheless, Cadence is at a very exciting juncture. So what are the next steps? And also for investors, what are the likely upcoming value inflection points?
I think we've gone through several of those next steps. Let's look at on our, the asset where the market is valuing us, which is Amapa in part, where we've seen a fluctuation, the greatest uplift. That is credit committee, settlement agreement, vesting, and then the PFS, BFS, and commissioning. Now, PFS is exciting and coming on board because we've started and completed, will have completed by the time I'm out in Brazil. I'll start seeing those PFS results, and we'll see what they result in terms of capex and opex. Not going to announce those because it's all about PFS will have optionality. So maybe we don't want to do 5.3 million tons at 65. Maybe we want to do small at 67%. So these are options that we need to take depending on what market we want to target in terms of the iron ore. So that is that. Let's see what happens with, which is interesting, Greenfield with our Australian assets, the Litchfield assets. Let's see how we do with that. Hopefully we'll be able to announce something in the next couple of months on that. And then of course let's look at the other value driver will be EMH, how that performs and see where they go. And so for me, in terms of what we control the announcements, it's going to be around the ASX, the Australian assets, Litchfield assets, and Amapa. And then, our portfolio is predominantly dominated by EMH and its performance.
Excellent. Well, it really does feel like Cadence is on the verge of a major re-rating. Kiran Morzaria, Chief Executive at Cadence Minerals, thank you for joining us today.
Thank you, Alan. It's been a pleasure.